there everyone and welcome to Markets Tomorrow, and in fact let's just recap how the final tally has been on D Street on Thursday. What an interesting day it turned out to be. We had a muted start for Asia. We pretty much piggybacked on that sentiment, sub 8100 for the most part of the day, and then Europe opened and bang, the bulls were in control. We staged a very smart rally, conquering that 8250 mark quite comfortably to shut shop higher by 0.8% at about 8270. Ditto was the case with the Sensex, which broke past the 27,000 level by the time we shut shop. It was clearly quite a bit of support coming in from the pharma as well as from the banking space as a whole. The PSU banking index was the top sectoral gainer, and we've snapped the two-day losing streak. Remember, we've been seeing consolidation as the markets have continued to remain on tenterhooks ahead of what might perhaps be the outcome. Is it going to be Brexit or is it going to be Remain? And because this will have serious implications as to what happens to global markets, the currency markets world over as well. So we'll be discussing that and lots more with some big voices on the show. Today we've got Rajat Sharma, CEO Sana Securities, as well as Sacchitanand Uttekar, technical analyst equities at Motilal Oswal. And the big question of the day that we will be addressing today is, will it be Brexit or Remain? And that, of course, is on top of mind of investors as well from here as on across the globe. And Rajat, that's the exact question I'd like to bring across to you, because a lot of experts seem to, allude to the fact that perhaps the impact outcome has already been factored into the equity markets. I don't really know what explains today's stupendous rally. We were obviously piggybacking on positive global sentiment with the European markets doing what they did. But how crucial do you think the UK vote is going to be for us?
Yeah, good evening. I think obviously it's very hard to predict what markets do on a day-to-day basis, but if I had to define what's happened today, I think it's a mature reaction, the way markets have behaved. Because look, my personal view is whether Britain breaks apart from the Union or stays intact, I don't think it's going to have an impact for longer than 2 days. Yes, currency markets, it will have a deeper impact, because if Britain breaks from the Union, US dollar will gain strength. And again, US dollar from 52, it came up to 68 in the last 3 years. I don't think fundamentals of the companies changed all that much. In fact, on the good side, IT stocks like Infosys and TCS should do well again. But look, I don't think you should look at how the outcome of this vote comes from an investment perspective. If you're a trader and you want to speculate a little, it's a different thing. So I'm not looking too much on the outcome of this vote. If I had to buy something right now and I find good value in it, I would buy it irrespective of how the markets open on Friday.
But no doubt, Rajat, it has kept markets on tenterhooks, whether or not it does have a meaningful impact on our own markets. So let's talk a little bit about how you expect the overall liquidity situation to shape up in the medium term. So far, you've got the FIIs, which have been sitting on the fence, pretty much seeing net selling figures day after day. What's the outlook as to how the overall liquidity situation could now pan out?
Yeah, so again, I think if Britain does decide to leave the European Union, which personally I think is unlikely, but if that does happen, of course there would be some pull-out of capital from emerging market assets. So in the short term, there could be some correction in the markets, but besides that, I think personally markets where they are right now are not cheap in any ways. So if you're looking to buy something in the Indian markets right now, it's hard. You've got to look for sectors where your downside is protected. What does that mean? That means look for sectors and stocks where even if the markets were to correct 5-7%, the impact of that on specific stocks that you're looking out will not be too much. Now, I say that not because liquidity could be pulled out if Britain leaves European Union. I say this because in any event, I think markets are slightly overvalued right now. You can't deny that. Earnings are improving this quarter. At the end of first quarter, we'll have to see how earnings pan out, and valuations could cool off. But right now, more than the worry of a liquidity crunch, I think the worry would be that markets are, not really offering that much value in most of the sectors.
Okay, so let's talk a little bit about what this really could mean for our own markets as well as for individual companies as well, because you have a lot of companies within the rate sensitive sectors that could in fact see an impact on account of the kind of exposure that they have. So let's get in Vivek then from our research team. And Vivek, walk us through the list of stocks and sectors that could be impacted on the back of this historical referendum.
Well, ahead of the British results tomorrow, whether British, where they vote, we are looking at some of the sectors that would actually remain in focus, and within those sectors, specific companies that actually have an high exposure to the European Union. So if we're looking at the information technology sectors, most of the major companies do actually have quite a bit of an exposure to the European Union and UK in particular. So if we're looking at TCS, Infosys, Wipro, HCL Tech, all of them have almost 25 to 30% of their revenues coming in from the European markets. Also another sector in focus would be the pharma pack. A lot of these companies do have some sizable amount of their revenues coming in from there. So Sun Pharma, Lupin, Dr. Reddy. Now, another name to watch out for would be Ipca Labs. Almost 20% of its total revenues does come in from the UK market. Looking at the consumer goods side, you're looking at GCPL, where sizable, almost 5% of the total consolidated revenue coming in from there. And also TTK Prestige is another stock in focus. Among the auto space, Tata Motors, always in the focus. JLR coming in there with almost 16% of its revenues each from both UK and as well as the European Union. Apart from this, if you're looking at the auto ancillary space, a lot of sizable chunks there, Motherson Sumi specifically. Apart from that, some of the other stocks, to track actually would be Balkrishna Industries, Vatek Wabag, as well as Tata Global and amongst key other names.
Okay, many thanks, Vivek, for giving us all of those details. So it's a number of stocks that are going to be impacted on account of the likely outcome of this referendum, which has already begun and is underway. Let's get in Sacchitanand as well to talk a little bit about the technicals. And, one really didn't anticipate this kind of a relief rally, the extent to which we saw a pullback. What do you reckon will be some of the important levels to map now on the Nifty? Is it safe to say that 8200 or 8250 will be retained?
Well, good evening. Yes, we have already witnessed a good relief rally in the last half an hour, 1 hour of the trade. But if you look at some of the significant levels, then I think 83.20 would be a very significant level to watch out from here on. So once we have a breach of this particular level, and that particular effect may come with the outcome of the event. In case if we see a breach, then probably we may see an extended move right up to 84.50. But on the flip side, if you look at the way Nifty has been behaving for the last couple of weeks, we have really not seen much significant activity. The floor around 8180, 8200, it's a very significant level again, and in case if we slip below 8180, then probably we may see a correction coming back in the market. So from the events perspective, I think 8320 would be a significant one. We need a sustained closing above this, and in case if we have that, we may see an extended rally further.
Okay, that's a view coming in on some important levels to mark on the index. But let's take it to individual stocks. And clearly, you had a big fillip coming into Sun Pharma, which was one of the top gainers on the index today, and ET now exclusive. Given that there's been a series of bad news, finally some respite and reprieve coming in. Darshan's here with the exclusive details. Darshan.
Well, sources do indicate to us that the remediation process at Sun Pharma's Halol facility is complete. Sources also indicate that the US FDA in most cases will inspect the Sun Pharma's Halol facility in the first week of July. So this is the big news that is there, because Halol has been a big issue for Sun Pharma over the past few years. So that and that is why there are a lot of capacity constraints. Now, we tried reaching out to Sun Pharma. They won't comment on our story. As far as the US FDA is concerned, we reached out to them also, and they said that as a policy they will not comment on this news. But what had happened was in September 2014, Sun Pharma's plant in Halol was inspected by the US FDA, in which they got a Form 483 with 23 observations, which mean that put a lot of pressure as far as the supply constraints were concerned, and sales were taking a big hit. In December 2014, Sun Pharma got a warning letter by the US FDA, but the number of observations were just 6. So the remediation would be easy. Analysts did believe that there were no no data integrity issues. Now our sources do indicate that once this will, and if you look at what our sources indicate, they say that the remediation is over. Anytime soon the US FDA will come and inspect the plant, and analysts I spoke to do believe that once this inspection is over and if this plant is cleared, that will throw a lot of positives for Sun Pharma because their plant was stuck. So the supply constraints will be over. They will again be started exporting to the US markets, and a lot of their products were filed from this plant. So Halol is an important plant for Sun Pharma, and its clearance is the big key for the stock to move ahead.
Oh, yes, indeed. Thanks very much, Darshan, for those details. And Pharma was on fire today. It was most of the large cap stocks like Lupin, Dr. Reddy's, which did very well. And the Pharma index as a whole was a big support. And not just that, you had lots of stocks from the broader end of the market too, which were in the limelight on the upside. Sacchitanand, I wanted to get in your views then. Is there anything from the Pharma space that you believe is a long-term conviction idea based on the chart patterns?
Well, if you look at the sector, we have been bearish on this particular sector from a technical perspective. We've already seen a good underperformance from this particular sector. If you look at some of the broader trends, the kind of correction that the entire sector is going on, we have still not seen any evidence of termination of the same. So we expect some more corrective moves here. So we are really not talking about any bottom fishing ideas here. In fact, Oro Pharma is one particular idea that we have been floating on the short side, and any respite or pullbacks that we see going forward could be utilized to create short positions. We have a pattern target of around 680, and a trade is available even at this point of time.
Okay, that's a view on Pharma, but we were just chatting a while earlier about the kind of implications that we could see for some of the rate-sensitive sectors, particularly the auto space, largely on account of the kind of exposure they have to the UK and the EU. And I just wanted to, Rajat, get in your views as to what do you believe would be the road ahead for some of the names like Tata Motors, Hero MotoCorp, or even some of the auto ancillary companies like a Motherson or a Bharat Forge?
Yeah, so I think if you had to look for something in the auto space, again, this might my view on the space is not really altered in any way by what happens with the Britain voting one way or the other. I think if you had to look for something in the auto space, you'll do two things. One, stay away from companies where the valuations are already very, very expensive. Yes, if Britain decides to stay with the European Union, Tata Motors could run up by what, another 5-7%, but I think it's already run up so much that I would not like to buy something in that space right now. If you had to look for something, look for domestic themes. Bajaj Auto, I think right now is trading at very reasonable valuations, so that's one stock you could look at. In the auto ancillary space, sometime back we were doing a comparison between Amara Raja and Exide, and I thought Exide right now has valuations multiple which were so far below. I think it was 17 versus 30 from, if I remember this correctly. So Exide was trading so much cheaper compared to Amara Raja that I thought that makes a compelling case to buy. But having said that, I don't think in the auto pack, whether auto ancillaries or automobiles in general, there is anything so compelling to buy that I would like to take a position in any of them where markets are right now.
Okay, stay with us, gentlemen. Lots more to chat about, including some individual stocks. We'll slip into a quick break right here on the show.
It may not be very, very damaging in the short term. It will be damaging. But my greater fear is that it will lead to the breakup of the Union, of the Euro Union, which I think will be really unsettling for markets. So I, for one, would be very careful if Britain leaves the Euro.
Brexit, again, like we spoke in the previous show, is more about what happens to the Euro and the European Union. Because UK per se is not really that significant an economy anymore. It matters to financial markets because that's the intermediary trade for currency markets and for financial flows. But standalone, I don't think we care that much about what happens to sterling.
Supposing there is Brexit which happens, is the world going to come to an end? It is not going to come to an end. Yeah. So if the market falls by 5-10%, that is the only opportunity which you have now.
Back with markets tomorrow. Our guests are still with us. And Rajat, let's go across to you then and talk about some interesting picks that you have. It's NTPC and SJVN.
Yeah, so, as I said towards the beginning of the show, that for most part, the markets are looking overvalued to me. And the two stocks that you spoke about, keep in mind that my view on these stocks is not from a short-term trading perspective, let alone how Britain votes tomorrow or whatever. These are fundamentally very sound stocks. You could buy and hold on to in your portfolio for a very long time. You would buy these stocks for a high dividend yield. You'd buy these stocks for long-term wealth creation. If I take both stocks one by one. But before that, first of all, I am really positive on power sector going forward, because while the sector has not done anything for the last 5-7 years, if you see the developments in the sector lately, whether it's the Uday bonds which the government came out with. In fact, when they came out with those bonds, a lot of people, including me, we were skeptical about whether they'll meet with any success. I think by now the states have taken a quarter of the loan of their electricity boards onto themselves. But anyways, I think if you look at the power sector, there's very few companies which don't have over leveraged balance sheets. I mean, most of the companies are near bankrupt now. So NTPC was one and SJVN was the other company, where in both cases the companies do not have a lot of debt on their books. They have very healthy interest coverage ratios. SJVN in particular I like because the mix of their power production, power generation is entirely in hydro and wind right now, and going forward I think 50% of their capacity generation will be from solar. This is by 2022. So currently the company produces around 1500 megawatt of electricity, which they plan to scale up to about 10,000 megawatt. But again, as I said, this will take time. At 28 rupees a share, it's offering you a dividend yield of close to 4%, and I don't see any downside in the stock. It looks very protected. So if you are an investor who's happy to buy something with a 4% dividend yield, this is the time you do that. And, if you were to play power theme in particular, NTPC is the largest power generation company. So it's a sectoral bet. I'm positive on the sector. So these are the two stocks that.
Okay, and finally, top technical picks. Sacchitanand, what do you pick out?
Well, we have two buy calls. One is in BPCL, wherein we expect the OMC space to outperform. If you look at BPCL, we have seen a strong run and a consolidation. We have a flag pattern which is developed here. 1030 would be the breakout level for this particular pattern, and we may see an immediate up move up to 1060. You can place a stop loss at 1005 for this particular trade. The second call is a buy call in Hero MotoCorp, wherein we have seen a steady run so far. 3020 has acted as a very good support. So expect a move back to 3170, and a stop loss can be placed around 3030. The last call would be a sell call in Titan, wherein if you look at the overall movement for the last 3 months, the stock has been oscillating within this particular range of around 390, 395 on the higher side, and on the lower side 330, 345. So we expect some bit of a cool off after this particular run up. A stop loss can be placed around 395, and short positions can be initiated for an immediate target of around 370.
Okay, many thanks for joining in, gentlemen, and sharing with us your top calls as well as views on the markets. And as we wrap it up right here on the show, here are some global reactions to the historical referendum.
I think the markets will certainly be reacting positively immediately. However, I would stress that unless the margin of victory for Remain is much bigger than polls are suggesting, this will not be the final word.
I'm not sure, to be honest. It feels to me like the market is slightly positioned for Remain, and so it feels like the risk is asymmetric right now. An exit vote or a vote to leave the EU would actually see more downside risk, maybe probably even twice as much as the upside risk should the vote is to remain. So I'm going to stay out for now.
Our view would be probably along with the market, you're bound to see some extreme volatility in sterling, obviously, and in obviously asset markets globally. Bond markets, what will happen with yields, etc., etc. There's no doubt that this event would be a massive event, not only for Europe but globally, and therefore markets would have to begin to price that in.
Either the UK staying in the European Union, and in that case we think the credit implications would be minimal, or the UK leaving the European Union, which we think would be credit negative for the UK, essentially for the rest of the world, probably much more mildly through an increase in volatility in financial markets.
Our suspicion is that investors will soon remember that the UK is a relatively small player in the global economy. It's about 3% of global output, and an even smaller player in the world's capital markets. From the perspective of Europe, we suspect that policymakers will not sit idly by and let the euro.